This is the IRS Solution Attorney, Darrin T. Mish. Today,
school's in session. I'm your co-host, Katrina Madewell. Welcome. We got Pat George back there on the board. He'll be happening with some traffic of whatever of sorts is left soon in the break.
And I think he's alluding to the fact that we're going to have a little boxing segue at some point here in the show. We're going to talk about Floyd Mayweather's tax problems with the IRS and how they're getting a little bit better, and it's probably not going to stop the fight that's upcoming with the MMA guy. What's his name again? I'm sure people who are listening can remember. I'm having a blank. It's because I'm on the air live.
I told you that with the MMA, my husband, if he is watching a little bit, he'll chime in and remind me who that is. But there's one guy I know who he is when I see him.
Oh, it's McGregor, of course, obviously.
Oh, McGregor,
right? Obviously.
Actually, I do know who he is.
So we'll talk about that at some point during the show. We'll talk about Floyd Mayweather's tax problems and how significant they are. I think he owes about $29 million to the IRS. So if you owe,
unbelievable.
If you're listening and you owe less than $29 million to the IRS, hey, you're in great shape. It's really not that big a deal, right?
So how do they get in that position? Do you know? Are they like contracted?
Well,
is that what it is, and didn't pay any taxes?
I think the problem with Floyd Mayweather is that boxers, especially big time boxers, they get paid in chunks, kind of like real estate agents, right? So he's getting paid in chunks. He's getting paid in big chunks, and they don't make. I mean, they make a lot of money, and it's not.
But there's no taxes taken out.
Oh no, absolutely no taxes taken out, and there's a lot of hands out. There's a lot of people get paid when there's a fight, and at some point he's just not managed well, and he's just gotten behind the eight ball. But I mean,
isn't the problem with all businesses though? Like, there's no plan. There's no real plan on here's your estimated income. Let's try to project this. Here's your expenses. You got to factor in taxes and all those other things that come with it.
Yeah, I was going to say, who among us who's at all entrepreneurial at all, who's been self-employed, hasn't fallen a little bit behind the eight ball with the IRS?
I definitely have.
It's almost impossible not to, unless you just have a very effective, in your system, and you're disciplined at following the system. In which case, you'll probably still fall behind with the IRS at some point in time. It's just one of those things where if you're a wage earner, you get a paycheck, there's no discipline to be had, really, right? I mean, they take the money as you earn it. So.
I've been there, Darrin. I've owed the IRS money. It was not a great time in my life, like many, many moons ago, and I never want to go there again. I'd rather not take a paycheck than to ever have them knock on my door again.
I feel the same.
Even though I know you, and I see you every week, and I feel pretty safe knowing that I could ask you anything. I still wouldn't want them knocking on my door.
Yeah, I hear you. I've actually had, even though this is what I do for a living, I've had 3 IRS problems in my life. And
wait, I thought it was 2. Was there another one?
I thought of another one that I had. I had one when I was 18. Because remember, I used to put up the signs for the open houses on the side of the road on the weekends. So I had that one, and my stepfather actually had to bail me out because I had the typical male reaction, like, yeah, whatever. And he's like, no, you can't just whatever the IRS. You've got to take care of this. And so he called and he got me into my very first installment agreement at age 18. So
what was that like? Do you remember? Like how much that was and how long?
It was like
$20 a month.
It was like a couple $100 a month probably. And at the time, I mean, you got to think about this. This is like 30 plus years ago. That's a lot of money to me.
Oh yeah, especially at 18.
And then a second time I had 2 separate tax problems when I was a sole proprietor. When I was an attorney, I had got my first employee. I generated a payroll tax problem because my accountant told me how to handle payroll, and I was kind of like, yeah, whatever.
How old were you then? Do you remember?
I was 28, but not a real mature 28.
Yeah.
And generated that payroll tax problem, and then of course I had a 1040 tax problem at the same time because I wasn't withholding, and I just didn't know what I was doing. I mean, so that's why I'm okay with telling people this, because if I didn't know what I was doing, after having gone to law school and all that, it's okay that if you don't know about how to handle IRS issues, because nobody really knows until you've gone through that, or if you've dedicated your life to learning it like I have.
Well, we talked about this before on the show, and even with as much education as you have, Darrin, with your years of college and law school, they never teach you that kind of stuff.
No, absolutely. There's no class on,
there should be.
When you open up your own law firm, these are the things you need to know. And I think, frankly, it's because most law professors don't know because they never did it. Most law professors
went straight from education to education, not really in the trenches.
Boy, this is about guaranteed to offend somebody, but most law professors never practiced law. They just didn't. If they did, they practiced law for a few years in a hoity-toity big law firm, which is not, okay, it's practicing law.
But that's not on your own in the trenches having to figure out how to keep the light bill on.
No, it's not the same. Yeah, it's really a whole lot different. And then I generated a tax, a third sort of, maybe this is the fourth at this point, depending on if you count that time when I had a 1040 problem and a payroll tax problem at the same time. The fourth problem was actually just about 5 years ago when I had some other outside business interests and they were going well and they were really cash flowing a lot of money. And I made the mistake. I got a little bit cocky and I was thinking to myself, yeah, there's going to be a tax bill, but whatever. I'm just going to pay it out of that month's cash flow. It'll be fine. Well, that business,
month's cash flow never came.
that business tanked, unexpectedly just tanked. It was just gone overnight. Boom, gone. Google made it go away.
So you had to do an installment agreement? So
I had to do, well, yeah, I did a blend of borrowed enough money to get the IRS off my back. And I think I might have been on an installment agreement, but it was pretty short.
At that very moment, you could have went tax protester. Just think.
Yeah, it's pretty hard to make a living doing what I do as a tax protester. As a matter of fact, that reps who represent clients before the IRS cannot have an unresolved tax problem. It's actually against the rules. And I was just telling another attorney this yesterday. Attorneys who practice in front of the IRS and enrolled agents and CPAs can be disbarred from practice before the IRS. It's separate and distinct from the states that you're admitted to. You can also be disbarred by the IRS. I actually have a friend.
How? On what grounds?
Oh, there's a whole
list,
slew of rules that you have to follow. But I have a short story about that. I have a buddy who does this at a pretty high level. And one day he just got to the point where the pressure was too significant. And he was on the phone with the IRS and he absolutely snapped and he went off.
Wait, how? He does what you do?
Yeah.
What happened? And that was the end of that.
And, I think maybe a week or two later, he gets a letter from the Office of Professional Responsibility. Hey, come on down to Washington, D.C. We've got a little thing we'd like to discuss with you.
Really?
And he retained counsel and went there and he still was, I think he was suspended for a couple of years. And so, yeah, we can't, really tell them. I was joking with him. I said, if you'd just hung up the phone, even abruptly, and then said what you wanted to say, everything would have been fine.
That's hindsight.
But you left that connection on, and that was the problem. So anyway, today, the topic of today's show is.
But that's good stuff.
I think so.
You could probably make a living just going to law schools and teaching. Here's law school 101. Here's what you need to know. Just offer a course. It's just that. Let me show you how to set some stuff up that law school will never teach you.
I've never been passionate about the idea of academically teaching or teaching in an academic environment, but what you just said actually kind of got my juices flowing. I mean, that would be really neat. It would be worth the time spent because certainly the money is not going to be at all alluring. But I could see that because you could actually make differences in people's lives.
Mm-hmm. And you'd have some connections from the people that didn't listen or take class.
You're right. It's
because they're going to be your clients in the future.
All the D students, y'all are going to be my clients later because you need to pay attention. So, yeah, over the years, I've taught a number of attorneys how to practice in my practice area of resolving IRS problems. And I'm pretty passionate about that, too. And the reason is I get asked this question a lot. They say, well, why would you do that? You're training your competition. And my answer is, well, number one, there's so much business out there. There's no way I could do it all. And number two, I'm impacting lives. I'm impacting the lives of those attorneys, but also all the lives of those people that the attorneys touch and help. So this is a little bit corny, but if you put good in the world, a lot of good comes back.
Yes. But the likelihood of you even bumping into the same person is non-existent. Because I've had agents that I'm friends with in my own marketplace.
Sure.
And the likelihood of us bumping into or competing for that exact same client, slim to none.
Yeah.
Never really happened.
There's a little bit of overlap. I've had some guys leave my firm and compete with me on a limited basis. And, occasionally they get the client. And that's okay. It's just life.
Yeah, but it's not, in the grand scheme of things, at the end of the day, it's not going to break you.
No, not a big deal.
Well, you're listening to the IRS Solution Attorney Show. And we are live today in the studio. Got a question. We are going to talk about some more Mayweather stuff.
We are going to eventually get to the main topic of the show as well.
Our studio call-in lines are 888-404-1010. Again, 888-404-1010. And if you have an IRS problem that you don't want to talk about on the air, you can get Darrin at 888-GET-MISH.
That's 888-438-6474.
And we'll be back in just a moment. Stick around.
Welcome back to the IRS Solution Attorney Show. I am
Floyd Mayweather.
I am the champion of all IRS representatives, the IRS Solution Attorney, Darrin Mish.
I'm your co-host, Katrina Madewell, always bringing the life of the party.
So anyway, today what we're going to actually talk about is what do you do when the IRS seizes your bank accounts? It's a pretty serious thing. It's probably people's worst nightmare. I have a client who's going through it right now, and I'll probably use that as an example because there's some kind of problems with what the IRS did.
They did it wrong?
In that particular case. I think they did. So
what happened?
Well,
so they went in, seized the bank account, swooped it, right? Took all the money that was in there out.
So here's what happened is I represent this company, and they're out in California. By the way, I can represent clients in all 50 states. I just got retained by a client in China this week.
Oh, I saw that. And companies or people, right?
Companies or people, because companies are just people, just a different in the eyes of the law. So I represent this company out in California, and they're a roofing company, and they have a revenue officer assigned, and I've been working on this case off and on for a year or more, and there was a little bit of continuity. Like we stopped representing them for a little bit, a month or two, and then we talked again, and we got back on the case, and for whatever reason, there was a new revenue officer assigned to the case, and the revenue officer, at least according to IRS records, sent something called a final notice of intent to levy. It has to come via certified mail to the taxpayer and the taxpayer's rep. And then they have 30 days to appeal. Taxpayer does. And if the appeal isn't forthcoming, then about 45 days later, the IRS can go ahead and levy their bank accounts. Well, in this case, what happened is...
It didn't come to you?
It didn't come to me.
I knew it.
It didn't come to me.
I knew it.
And the client says that she never got it. Don't know how accurate that is.
That's in all the mail they never opened. Got thrown away junk mail.
Don't know if that's, but it's a certified, and we talk about this on the show all the time. If you get those little orange slips from the government, or from the post office rather, you need to go down and sign for your mail. I don't care if it's IRS mail or if it's, mail from Publishers Clearinghouse. You need to go down there and sign and figure out what that is, because unimportant mail does not come certified mail. I think we can go with that as a rule in life, right?
The only thing is with
people
news. With crazy schedule like me, I wish the post office had something where literally you could go in after hours, swipe your ID, and get your mail. Because if you don't make it there during those regular hours, they don't keep it that long, do they?
I think they keep it for 3 days.
That's
which
not
can
that
be
long.
really tough, especially you're going on a cruise here in a couple of weeks.
Yeah, or if I got 3 days stacked, I'm not going to cancel an appointment to go pick a piece of mail.
So I've got it made because I have a courier that goes to the post office 5 days a week. So I don't ever have to go.
But they can't pick up your certified mail.
Oh, yeah, they do.
They can?
Oh, yeah. Yeah, I don't know how we do it. They have a letter of authorization or something down there, so that he picks up all the certifieds. He drops all the certifieds off. Kind of a funny short story. For years and years and years, I personally went to the post office box every day for like 10 years. And then I was talking to a business coach of mine one time, and she was kind of like, "Well, how you doing?" I'm like, "I was kind of grumpy," which is not uncommon.
He's always really grumpy.
Which is not uncommon. And she says, "Well, what's going on?" I said, "I just got back from the post office. It took me forever. I had to stand in line, blah, blah, blah." She goes, "Wait a minute. What? You're standing in line at the post office?" Yeah. Why? Well, I've always done it that way. Like, that's where the checks come and stuff. She's like, "Okay. How many hours a month do you spend doing that?" Quickly do the math.
At least 5.
10. And she's like, "You're crazy." She's like, "You need to go and price a courier to go do that for you." So you want to hear how much the courier actually costs?
How much?
$7 a day.
What?
And if you were in your regular life, that would be kind of a lot, right? But no, not to save 10 hours
a week.
Yeah, 10 hours a month.
Or a month. So yeah, it's a lot. And it might be more, really.
Yeah, depending.
You're going every day.
Yeah, because there's sometimes when you do have to stand in line for the certified or whatever, and there's 17 people in line, and then just the kicker was the post office eventually moved the post office that I was using from a good location with lots of parking to a high rise downtown where there is no parking.
Definitely not convenient.
So yeah, I feel bad for the courier that works for us because he has to go deal with that every day. But hey, that was his choice. He likes his job. That's great.
Somebody's got to do it.
I didn't like that part of my job, so we stopped doing it.
Well, there's always jobs somebody likes, someone doesn't.
So let's talk about what is a levy, okay? Because that's really what we're talking about here. When the IRS seizes your bank account, we're talking about an IRS bank levy. The word levy is easy to get confused with the word lien because they kind of start out the same, but they're quite different. A levy is actually a seizure of some sort of property, right? So a bank levy is a seizure of your bank account.
Swoop. we're going to take it.
Yeah, that's pretty much it. And it's not immediate. There's a couple of misconceptions when it comes to bank levies. People think, oh, the IRS has, they say this every time. Oh, the IRS has frozen my account. Well, no, not really.
Probably feels like a freeze.
Yeah.
I mean, I
might have the practical effect.
I can understand why people think that because they go to use their debit card and it doesn't work. So you would think it's frozen.
Yeah, it's really not frozen. What happens is on the day that the bank processes the IRS bank levy notice, your funds are frozen, so to speak. In other words, what they do is the bank takes the money that's in that account on that day and sets it aside. Okay, so day 2, the next day, you can put money in your bank account. You can use your bank account. IRS has no claim to those funds. It's just the funds that were in there on the day that the bank levy was processed.
Which is pretty astounding. I would imagine, I would venture to say 90% of people don't know. That it's only that one day and not the day after.
It's probably like 99% because I know practitioners that don't know this information. And so then the bank has to hold that money they just basically have to hold that money for 21 days to give the taxpayer the opportunity to, discuss this with the IRS and try and get it back and that kind of thing.
And how often can you actually get that money back?
It's pretty hard. It's really pretty hard. You're kind of in a begging situation where there's not a lot of leverage. Oftentimes, taxpayers are not current with their ongoing obligations. We talk about this on the show all the time, in that you really, in order to take advantage of any of the collection alternatives or opportunities that we talk about here on the show, taxpayer has to be current. Well, what does that mean? Well, you can't have any missing filings. So if you have missing tax returns, they have to be prepared and filed. If you're a person who's supposed to be making estimated tax payments, those have to be on time. So here we are in the 8th month of the year, right? So you would have had to make at least 2 quarters worth of estimated tax payments in order to be considered current. Most of my self-employed taxpayers, if they've come to me like within the last few months, not current. So it makes it really challenging. This particular client that's out in California, not really sure if they're current yet or not. Going to have to investigate that. If they are current and the revenue officer sort of did bypass the power of attorney, once I get him on the phone, he probably will release the levy. There's not a whole lot of money in there, but the taxpayer's upset, obviously.
So they can't, do you think they pick or watch a day when there's more money in there over another?
No. It's absolutely, it's a...
That's Murphy's Law,
it's
right?
kind of like, the terrorists on the ground with the AK-47s and a F-16 flies over them at full speed and they're shooting up in the air. It's like, yeah, occasionally a bullet's going to hit, but they don't really know. It's really hard. So it's like I
bet you they pick a lot of Fridays.
Yeah, it's just a golden BB. If I was a revenue officer, I would be real strategic about this, and that's why I'm glad I'm not, because I would actually time them to hit, the first of the month or the last day of the month, or when payroll's about to happen. Because really, the point of a bank levy, typically with the IRS, is not so much to get the money in the bank. It's really to get the attention of the taxpayer. That's typically.
Yeah, that would do it.
That's usually more the goal, especially if you have taxpayers who have been.
Now, what if you have more than one account? Do they see them more than one?
That's a good question. Let me finish this thought. Really, it's to get their attention, especially if the taxpayer's been ignoring the problem for a significant
all the
amount of time.
notices, they go on and on.
Or if there's a revenue officer involved and the revenue officer gave them deadlines and they completely blew them off, usually the revenue officer will go, hey, this is his way of saying, hello, I'm going to shake you a little bit.
Deadlines to what? Make payments or send returns?
Or just
or
usually what will
whatever?
happen is the revenue officer will make initial contact, give them a laundry list of stuff that they want them to do, bank statements, blah, 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 with deadlines. And a lot of taxpayers just blow them off completely. It's just like they ignore it, like whatever. And that's the revenue officer's way of saying, hello. McFly, hey, this is a problem. I've got a lot of power here and I'm going to use it if you don't, get with the program. So your question was, what happens if they have multiple bank accounts? Well,
is it common for them to swoop more than one?
If the IRS knows about those bank accounts, they're going to issue bank levies to all the banks. So if you bank at Bank of America, Wells Fargo, SunTrust, whatever.
How do they know?
Well, that's a good question. The IRS has a computer system that tells them about some of this stuff. But a lot of times, when a taxpayer is required to submit a collection information statement, it has that information on it. So, or if they've been making estimated tax payments via check.
There you go.
Yeah, there you go. So they know about that bank account.
But if they open another account, they probably wouldn't know that.
That's
right?
exactly right. Sometimes we tell them, hey, what you need to do is run down to a smaller, more local institution. Open up a bank account. It's going to take the IRS a long time to find out about it.
Just to make sure that they got some money to dig themselves out of that hole.
Yeah, absolutely.
You're listening to the IRS Solution Attorney Show. We'll be back in a minute. Studio call-in lines, 888-404-1010. 888-404-1010. Do not dial if you're driving. We'll be back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
I'm your co-host, Katrina Madewell.
Okay, so today's topic of the show is actually, what do you do if the IRS levies your bank account, actually seizes your bank account?
Okay, so back to my question.
Okay, your question.
We're
Multiple
talking
bank accounts.
more than one bank account. Like,
Right.
what's the likelihood that they would seize more than one? Do you see that happen?
Well, if you've already submitted that information to them,
They're gonna seize everything they can see?
They're going to take everything because remember, it's not so much about getting the money. You know, if you owe $2,000 and they levy you, they kind of hope they get all the money and close the case, but that's not normal. Normally, you
owe a lot, right?
Client owes, $100,000 or something like that, and
Because they're not really paying attention to somebody with a $2,000 tax problem, right?
Not typically.
There's bigger fish to fry.
Although I've had some.
Really?
But, yeah, I had a.
Like, where does that come from?
I had a big knockdown drag out with a revenue officer recently within the last year over a lawyer client of mine who owed $9,000.
Which is tiny in your sea of fish.
Yeah, it's ridiculous, and so yeah, so we have this big
Was
fight
that a
over
principal thing?
$9,000.
Like she wanted to make an example out of him, kind of thing, or?
It was actually a male revenue officer, and I never got to the bottom of what the big deal was, other than hey, it's a lawyer. A lawyer's supposed to know better. Lawyers are more high profile individuals. They we're going to make an example, that kind of thing. So yeah, sometimes they do get small cases.
They do,
but it's more common. You're probably not going to get a revenue officer in the Tampa area unless you owe in excess of probably $50,000 to $75,000. If you're out in Texas, you're not getting a revenue officer if you owe like under $500,000 because there's a lot more people there. There's more people there, but there's also more money there. The economy's better in Texas, and so the IRS only has limited resources.
they're looking for that folks with the big oil rig.
Yeah, they're looking for J.R. Ewing, right?
Yeah, first. Oh my goodness. Okay.
Okay.
So if you have more than one account.
Yeah, if you have more than one account, they might get it.
So what to do? Because the next day,
if
you got a deposit going in, it's okay.
Yeah, you can do that.
By that point, I would imagine most people are probably freaking.
Yeah, and if you don't have a rep, what you need to do is you need to call. First of all, this is crucial. You need to get a copy of the bank levy from the bank. Okay, and some banks, even some of the banks, even the big banks, are not real cooperative where this go.
So what do you do if they're like, nope, sorry, can't give it to you?
You got to keep asking. You got to talk to the manager. You got to keep going up.
Is there anything in the IRS publication that you can show them that says you have the right to get a copy?
You're definitely entitled to a copy from a bank.
Is it anywhere in there?
It's probably in the banking regs actually, but because we will routinely have clients who call and they're upset and they're like, the IRS sees my bank account, and we say, okay, get us a copy of the levy. And then when they get a copy of it, it's for child support or student loans or something else, or it's the state. In fact, I was talking to a guy this week that had told us that he had previous bank levy, and then when we got down to browse tax, it was California took his, had levied his bank account, so it really wasn't the IRS at all. So that's one thing, is you got to get a copy of the bank levy because you got to see what's going on. You got to see, is it the IRS? Is it student loans? Is it child support?
So they had this IRS problem. They thought it was them, but it was really child support enforcement.
Yeah, not unusual, really.
But that's a good place to start with their IRS problem, right?
So then get a copy of it and then call the person who issued the levy, right? So if it's a revenue officer, it's it's easier. Here's one thing that revenue officers do, and I kind of hope some of them are listening. If you are a revenue officer and you're listening, call in. We'll leave you anonymous. I want to know the answer to this question. What they will often do is they'll levy the bank account and then they go dark for like a week, 2 weeks. They won't return the phone call.
They levy it right before they go on vacation?
They levy. I don't even know that it's necessarily that it's right before they go on vacation. They just ignore you for a while.
Why? To see if you're wondering what's next?
You want my honest opinion?
Yes.
I think they're burning the 21 days.
Really?
I really do. I think they're just burning up the 21 days. I had a case recently where we had a fairly significant amount of money. It was a South Florida case, and a fairly significant amount of money was levied. And so we're working on the 21 days, and he didn't get back with me until like day, 17 or something. And then we're working on it. We got to day 21. He's like, oh yeah, I'm sorry.
Can you make them respond any faster? Is there anything in the tax code where they have to respond within a certain time?
Well, you have a right to talk to their manager, if they're not getting back with you and returning your phone calls.
I think all government employees, like including the IRS or anything else, should have to respond to any inquiries within 24 hours.
That'd be
48 hours tops.
Be kind of a neat rule. Yeah, you can talk to their manager, but if you think about it, when you go over someone's head,
yeah,
what does that do for your future relationship?
Well,
it's not usually the key to success. So it's just a kind of a...
So if that rule was in place, I wouldn't have to do that.
Yeah, it's just kind of a dicey situation where I want the best for my client, but then I have to think about future clients too. And so you just do what you can. Fortunately, we don't have, in our practice, we don't have lots of levies because if we get involved in the case early enough, we can prevent those things from happening. But occasionally it does
Usually
happen.
by the time they hire you, it's too late for that, right?
Well, usually, no. Usually if they hire me, there's different things I can do. I can file appeals. Like we had talked about, if the IRS sends you a final notice of intent to levy via certified mail, you have 30 days to appeal. And so we will typically file within the 30 days because I like to work out cases and appeals more than I like to work them out with revenue officers anyway. But you can also file a late appeal. We barely ever talk about this. If you get a final notice of intent to levy and more than 30 days have gone by, but less than a year, you can still file an appeal.
It's a pretty long grace period.
Right, using the same form. It's called an equivalent hearing because it's the equivalent of that, of that appeal. There's just some minor rule differences that we're not going to talk about
Seriously,
today.
like an 11-month grace period?
Yeah.
That's what I just heard.
And it was actually, that rule's only been in place maybe, 10 years. And the reason that they put that in place, I think, was because guys like me would, previous to that, there was no limit. You could always have an equivalent hearing. If a final notice had ever been issued, you could request an equivalent hearing. So I would look at the transcripts and I'd be like, yep, final notice was issued 8 years ago. And I'd file an appeal. Like, why not?
So people like you found all those little holes in the law.
Absolutely. And now when you file an offer in compromise, which is the program where you make a deal to settle for less, you have to pay a filing fee and you have to put down 20% down of what you're offering. In the old days, everybody got an offer because there was no barrier to doing it. You didn't even have to do it even close to right, and it would stop everything bad from happening. So you really were like a magician. But it was like guys like me, they just decided to go ahead and change the rules because honestly, we were taking advantage of the situation, not in an illegal or immoral way. Well, but we just saw the chinks in the armor, and we're like, okay, this is what we're going to do.
Half the battle is knowing the rules. This
absolutely.
reminds me of like playing Scrabble with my family. Nobody wants to play with me because I know all the 2-letter crazy words and nobody ever uses.
It was kind of like when I was a public defender years ago. If you had a particular judge that just was given, just being unreasonable, then what we would do is we would all band together and we'd set every case for jury trial, right? And then that actually would change it would clog up the judge's docket. He wouldn't be happy because he couldn't take an hour and a half for lunch, and eventually they'd come around and we'd work out some kind of compromise and we'd get the cases worked out. But same thing. With the IRS, you just have to take advantage of the situation and the rules and the opportunities that are afforded to you. And
it's still a pretty long time. Like 11 months, I think is a long time.
Yeah, it's actually 12
Plenty
months.
of time.
Yeah, and we do that a lot. Now, they don't have to give you collection protection if you file that late appeal, but as a practical matter, they do. And so
I guess I figure if you're working with them, you might as well.
Yeah, I think so. And when you get to appeals, typically the mentality of an appeals officer is a little bit different than the mentality of a field level officer.
So what's the first thing somebody should do? And I guess there's times where it makes sense to hire an attorney and times that it doesn't, right?
Yeah, I mean, it's hard. If you're not current, you're not getting the levy released, period, okay? That's just the bottom line. But if you are current and you're willing to enter into an installment agreement or, an offer in compromise or some kind of collection alternative that we talk about on the show.
But you got to have some money, right? To put down on that, to pay your attorney, all that stuff?
Usually. But let's just talk about if you don't have an attorney. I'm okay with that. You have to call the person that issued the bank levy and you have to have a conversation with them. Okay, I get it. You got my attention. You have my full and complete undivided attention.
Don't want to hear that.
I promise to cooperate with you in the future. Will you please release the bank levy because I need that money for payroll, as an example. Most of the time, unless there's been a lot of bad blood, they're going to go ahead and do that. If you're dealing with a revenue officer. If you're dealing with ACS, which is the automated collection system, and it's basically a computer has decided to do this to you, good luck. It's probably not going to happen. It might, and you might have to talk to
Can you get it assigned to
4 different
officer?
people. Not really. We used to be able to, but they don't really have the inventory to do it.
How is that automated? Is like a certain dollar amount or smaller ones or?
So the rule here is if you owe the IRS a tax liability and it has not been to a revenue officer, but it has been assigned to collections, it goes to ACS, which is the automated collection system. So it's essentially just a bunch of computers kind of working your file, really dumb computers actually, And then if you call in, you talk to somebody at a call center who has lots of discretion to say no, and very
Get a
little.
call center in India. Just
We
kidding.
haven't gotten that bad yet, but
Just kidding.
And lots of discretion to say no, but very little discretion to say yes.
So what's the likelihood that they actually can get that money back or any portion of that money? And is it all or nothing? Like, what's the percentage?
I hate to say this. It just depends. And
hit or
sometimes
miss.
it's all of it. Sometimes it's a portion of it. Sometimes they're going to require that you justify why you need it back. Sometimes they're not going to justify why you need it back. They'll just give it back to you. It's like,
What if
hey,
you
we got your attention.
Said, hey, can you keep 30%? I'll enter into an installment agreement. Please give me the rest back. You think they'd say yeah to that?
Hey, everything's negotiable. Depends on the circumstances. If they're not current, no, you're not getting it back.
My baby needs diapers.
If you've already blown the revenue officer off 5 times, you ain't getting any money
probably not,
back. You're just not. It's not going to happen. The person's just throwing up their hands and they've decided that they're going to move on, getting the money without your cooperation at least.
So what do you think is going to happen with this whole Mayweather thing? He's got a pretty hefty tax bill.
So here's what's going on with Floyd Mayweather. Okay, he owes $29 million to the IRS, and I think most people have heard this. And he's trying to get the IRS to hold off until after the fight, and I think that's a reasonable request. I mean, he's getting paid coming up. I think he's making. I want to say he's going to make $77 million. I guess we'll have to talk about the rest of these details when we come back from the break.
Think about it. It's going to require a lot of, they want him to win because they want the money, right? Everybody wants him to win.
Well, he's getting paid whether he wins
But
or
he
gets
wins
knocked out.
more, right? If
I think he
does get
does.
paid.
But then think about it. He's got to pay taxes on the winnings, and then he's got to pay this back tax bill too.
If I was the IRS, I would wait until he got it. Then you want to seize the bank account. That's what you want to do. It makes more sense. Anyway, so we'll talk about Floyd Mayweather's little problem when we come back. You're listening to the IRS Solution Attorney Show. You can get Darrin directly off air at 888-GET-MISH.
888-438-6474.
We'll be back in just a moment.
Welcome back to the IRS Solution Attorney Show. I am the one and only IRS Solution Attorney, Darrin T. Mish.
Like the fish, but Mish. This is your co-host, Katrina Madewell.
We need to get back to this Floyd Mayweather situation. So Floyd Mayweather, boxer, going to fight Conor McGregor, coming up here pretty soon. And Mr. Floyd Mayweather has some problems with the IRS. He owes about $29 million to the IRS, and he recently got a tax lien released. And a lot of people want to know, what's that about? Why'd they do that? Why do they come down on me when I owe $9,000 and Floyd Mayweather owes him $29,000 and they released his tax lien? Well, it's not exactly as it seems. So you see, the tax lien that's been filed against Mr. Mayweather is for $3.3 million, and it was recently released because he paid it off. So yeah, it got released. Okay, that makes sense, right?
Yes.
If you have a lien or a judgment or something and it gets paid off, it gets removed, or at least it gets released. And that's what happened in this particular case. So
I bet he wished his statute of limitations was up.
yeah. Yeah, that's for sure. I'm sure he does. But so he's still going to owe the IRS, whatever $29 million minus $3.3 million is. A lot of people are like, well, Darrin, I can do that math. Well, except penalties and interest are accruing at an unbelievably rapid pace. So
You can't get that percentage in the bank right now.
yeah, the IRS is really tagging the guy. And
I think their penalties and interest should have to move with prime.
it does. It actually does.
It does?
The penalties don't, but the interest rate does. Right now, the interest rate with the IRS is charging is only 3%, which sounds great, right? Except for it's compounded daily
Compared to what?
with interest and with penalties.
Yeah.
So yeah,
It's not simple interest. It's compound interest.
Now during my
Huge difference.
18-year career of representing clients with tax problems, I've seen that rate as high as I want to say 12 compounded daily. That's crazy right there.
When I started in the industry, the rates literally were 12%. Conventional money was in the 12s.
Which is great compared to, the 70s when I was 19.
Yeah, for sure.
And
they probably never thought they'd see the days where it's like 4s.
right. 3s and 4s, 5s.
So should we jump in and answer a couple questions? One of them we got from Bill. I'm not quite even sure I understand the question, but you may, Darrin. It says, how can I recognize an abusive tax avoidance transaction?
Oh, that's a good question. So abusive tax avoidance transaction, also known as ATAT, ATAT, is an IRS abbreviation for tax protesters. Okay, so the IRS is not allowed to call people tax protesters because, I don't know, they decided it's not polite or politically correct or something. And so they've gone ahead and renamed them abusive tax and avoidance transactions. How do you avoid them? Well, I'm going to give you the short answer. If it looks too good to be true, It is. It is. So if you hear an argument that's, and I'm going to offend somebody, I'm sure, but oh well. If you see an argument that, the IRS is actually a private corporation, has no right to collect taxes, okay, does that make sense? Does that sound too good to be true? Yes, it does. If you see an argument that, the whatever, I can't even remember off the top of my head right now, the amendment to the Constitution that allowed the income tax, if you think that, you see arguments that was never ratified and that sounds too good to be true, it is.
Right, when everybody else is paying taxes.
So I don't want anybody to misunderstand me. Let's just assume for a second that those are legal arguments that have merit. Okay, I'm just going to grant you that for a second. Some of those arguments, let's say they have some legal merit. As a practical matter, a federal judge is never going to overturn the income tax system in America. It's just not going to happen.
It makes America.
If that issue went to the Supreme Court of the United States, they're not going to overturn the income tax. The mayhem and chaos that would follow would basically cause anarchy in our country. And I don't think anybody there's some people that want it, I guess, but most people don't want anarchy or any more anarchy than we're currently going through.
We got enough.
So I just don't really see that as a practical thing. I've been offered many times throughout the years the opportunity to go and overturn the IRS tax system, and I've chosen not to because,
you're like, that's not my gig.
So I almost let the time run down for the IRS train wreck of the week. So I'm going to have to go fast on this one. This is a really cool case. Represented a gentleman who's a senior citizen. He came to me. He owed the IRS about $89,000 in 1040 income tax. We had a problem, though. When I was getting to talking to him, he says, well, I have very low income, but I have a problem. I have a free and clear condo worth more than $89,000. So it's like, oh, that's not good. Right? Because in theory, he has the money to pay the taxes. If he just sold the condo, he would have the money to pay. So we took advantage of a special program within the Offer and Compromise program called Effective Tax Administration. Don't talk about this a whole lot here on the show, but these ETA offers stand for the proposition where the taxpayer could theoretically afford to pay, but it would be unfair to cause them to do so. I filed a number of these lately, and I keep winning them. So we were able to get this offer to go through for $2,000. So he owed $89,000. He is going to pay the IRS $2,000 to take care of this tax problem. I really like it because, when you're in your retirement years, you really shouldn't have to worry about the IRS, breathing down your neck.
What's the likelihood that they would make you sell a primary residence, right? This condo was his primary residence?
Yeah, it's not super likely unless you're one of these ATAP people that we just talked about.
They love those guys.
They might actually make you sell your primary residence. In that case, they can. This is a common misconception. People in Florida here think, well, we have an unlimited homestead. They can't do that. Yes, they can because of the supremacy clause.
Federal supersedes state is what it is?
The supremacy clause, the U.S. Constitution says that federal law supersedes state law. So they can take your primary residence. There's some extra hoops they have to jump through. If they want to do it, they can do it. Not a lot you can do to stop them, but they don't do it that often. So that's the good news.
It's just really bad PR for them.
Yeah. And in the few cases where they have threatened to do it to a taxpayer who was not, an ATAC kind of person, went to some of my friends in the media and they went and did news stories and then it just disappeared as an option. Yeah. So that's one of the things we do. Don't have to do it a lot because the IRS is really pretty reasonable when it comes to primary residences. They don't really want your house. They want some money.
Yeah. They want your money. They want your attention.
Yeah. That's for sure. So it's been a good show today.
It has been. It's been fun. Thank you guys for called in and the ones that called in and commented and said you enjoyed the show. We appreciate that. I know the podcasters not so much. They don't love it. They want us to get straight to the point. But, live radio, you got to have fun. You got to make it entertaining.
It makes it worth the drive over here once a week to know that I'm going to hang out with my friends on the air and off the air and just talk about a little bit of the tax problem stuff and what you can do if you have those kinds of problems.
Hey, make sure you tune in tomorrow for Tampa Home Talk. We got a special guest. Mr. Chris Hogan is going to be joining us, talking about their upcoming seminar. For this week, this is the IRS Solution Attorney Show. You can get Darrin at 888-GET-MISH.
888-438-6474.
And
for today, we're out.